You're back on Morning Movers. Tech earnings will ramp back up a little bit next week. One of those to focus on will be Salesforce. It's been a year to forget for Salesforce. Shares have slumped more than 30% this year, and last week hit a new 52-week low. Expectations are for adjusted EPS of $2.85 on revenue of $10.26 billion, with the big question of whether the company can monetize AI going forward. It's time now for Options Corner. Joining us now to take a deeper look is Rick Ducat, our lead market technician here on the network, of course. Now, as we take a look at Salesforce coming into their earnings, looking at them more broadly against the market and the sector itself, how's it stacking up?
Not great. To be very blunt here, Salesforce down almost 31% during the past year. Tech sector up 21%, even the S&P up about 13%. When you look at some of the other bigger names in the software sector that are more similar to Salesforce, you can see they're remarkably similar once you get to about here. Very, very similar trajectory, similar moves here, kind of indicating that the broader space is not doing very well, except for a few standouts like Palantir and AppLovin here that are making up the bulk of the gains. Notice as well, Workday had a very sharp drop after its own earnings. They had not any significant raise to guidance here. The sector is not looking fantastic still overall.
Yeah, it's not a great setup coming into their earnings, especially on the heels of Workdays. As we take a look at Salesforce's chart on its own, though, as far as its performance over the last year, I know you mentioned it's down, but what are the technical signaling to us?
Well, we did seem like we were going to hold on to this supportive area here near about 230. You can see that was a notable low point here, and once again here, but we breached it. We could not really make a convincing recovery above it so far. The pattern that we're seeing here, this falling wedge type shape, is still in play right now. We've kind of retreated back within that boundary here. So we can also see our more absolute boundary on our yearly chart. About 222 would be the line in the sand. That's about where we had our lows. So when we add our moving averages to our chart, we can see that they're all trending downward. They're continuing to diverge apart from each other. Price failed to overtake its short-term 5-day EMA representing one trading week. RSI still moving lower. Trend line still in play here as well for the RSI, but we have earnings coming up, so that could be a very significant disruption. Things tend to stagnate a bit as we head into this event risk type situation. Volume shows us that our point of control, our heaviest trading area, right here near 245, that would be the important area for price to work its way through on if the bulls were to reassert themselves and try to continue an uptrend before they test those subsequent highs here near about 265 or so. So notice as well, volume drops off very sharply once you start to get above 280, 275. So those would be relatively thinly traded.
Relatively thinly traded. All right. Right now trading about 228. As we're looking at the options activity around this name and how it's normally trading, any trends you're seeing or observations you've made?
Well, we can look first at our volatility measure here, our standard deviation channels. We are right on the money pretty much with our linear regression line, our line of best fit. So by one measure, we're right about where we should be. And when we look at our expected move here, December 5th, we'll capture earnings, about an 8.4% move plus or minus our orange box here. The monthly, December 19th, 22 days out, about 10.2% here. So really, though, when we think about an example trade, these are important things to consider when we assess what we're going to do.
So as you assess what you're going to do, you said we're right sort of on our line of best fit, but we're also seeing some bearish signals here. So as you look at an example trade, how might you structure that, especially as we go into an earnings event?
Right. As we said, sector not doing great. Analysts not super happy either. Citi cut their price target to 253 this week. So when we think about a potential trade, perhaps more bearish here. One thing you could do for an example trade, +1 December 19th, 220, 205, 200 put butterfly at a 350 debit here. So you can see that this is a little bit different from our conventional butterfly where the strikes are equidistant. That would give us a triangular shape looking like a mountain peak or something. But because of how badly software is doing, that would run the risk of the extremely frustrating situation of the move overshooting your boundary, and it would result in losses again. So the unbalanced butterfly avoids this here. If we were to move below that 200 level, we would see a flat profit of about 650, but we also have the peak at those short strikes at 205. That will result in an 1150 max profit here. So once again, too, this trade is defined risk. Max loss would be our 350 debit paid here. Our break even 216.50. That's about 5.5% to the downside here. As we said, expected move about 10.2%. So well within that range of profitability. If we do get that oversized move too, we would need to get down about minus 12%, 12.5% or so to start to get to that flat area at which we would not really gain any additional profits here. But pretty similar to really a long put spread. The trade-off is that you have less money you have to pay up front at the expense of a smaller max profit.
Certainly, and you mentioned Workday, and we did see Workday move lower, but taking a look at previous quarters for Salesforce, they did have a 5% surprise to the upside in terms of their EPS. Last quarter, they had a 1.5% surprise to the upside on EPS, so in terms of their revenue there. So it is interesting to look at, it is a competitor, and be careful not to take a look at that, but a longer term play here. You've given yourself a little bit of leeway with their earnings event coming next week out through December 19 here. So we've got a little bit more protection to protect from any of those potential bigger swings we've seen post earnings here.
Yeah, so when you also think about this one too, there is a risk to this one. It's not a sure thing like all trades here, but we are defined risk here. So you would the max loss of 350, as I said, would be your potential risk point there. But really, software not doing great, as we said. I don't know if you had a chance to ever look at AI. It can write code. It's not perfect, but it's very alarming, or it would be if I were an entry-level software developer. Just food for thought.
Well, Rick, thanks for being with us for Options Corner and for that example trade. And I also want to thank all of you for joining us today on Morning Movers. I'm Marley Caden in for Diane King.